After crypto lending platform Celsius went out of business on June 12 at 10:10 p.m. Eastern Time, the Wall Street Journal, WSJ, quoted some people familiar with the matter as saying that Celsius is hiring restructuring lawyers. The WSJ reported that Celsius wanted to hire bankruptcy and restructuring law firm Aiken Gump Strauss Hauer and Feld LLP. However, a new WSJ report claims that Celsius is now working with restructuring consultancy firm Alvarez & Marsal. Since June 12, the company has been virtually insolvent. The reason people suspect that Celsius is in financial trouble is the company's June 12 tweet. Due to extreme market conditions today, we are announcing that Celsius is suspending all withdrawals, swaps and transfers between accounts. There were also rumors that Celsius had raised 17,919 WBTC in the Maker protocol, which were liquidated. People familiar with the situation explained that Celsius tried to get help from investors first. Now another WSJ report says that Celsius may be partnering with restructuring consultancy firm Alvarez & Marsal. People familiar with the matter claim that Goldman Sachs is allegedly eyeing Celsius network assets. Additionally, CoinDesk's Tracy Wong revealed that Goldman Sachs is looking to raise $2 billion from investors to buy distressed assets from troubled crypto lender Celsius. The report explains that the proposed Goldman Sachs deal would allow investors to buy Celsius assets at potentially deep discounts in the event of bankruptcy filing. The Reuters report went on to detail that the U.S. Securities and Exchange Commission, SEC, and state regulators are investigating Celsius's handling of the account freeze. At the same time, Aiken Gump and financial giant Citigroup told Celsius that they were recommending that he file for bankruptcy. Both companies declined to comment on the topic. After Celsius suspended withdrawals, there was no information from the company other than a blog post in which Celsius informs the online community that the company's goal remains to stabilize liquidity and operations. CEL, the native token of the Celsius network, is down 80.9% over the past 12 months and is 86.3% below the asset's all-time high. The circuit looks ridiculously simple. Goldman Sachs, through its crypto infrastructure, which includes Circle, Coinbase, FTX, Alameda, USDC, creates liquidity problems for the Celsius network according to the knurled scheme with Terra. Celsius, in turn, suspends the withdrawal of the crypt and all swap operations. Further, by contacting Aiken Gump Strauss Hauer and Feld LLP, Celsius tries to find an investor who will cover the current liquidity gaps, and they in turn frame them for Alvarez & Marsal, a Goldman-linked consulting company, actually high society tough raiders, who advised to file for bankruptcy. At the same time, through the structures of the SEC, pressure is being created on the founders of Celsius and intimidated by prosecution, including criminal ones. Founders become accommodating and willing to go bankrupt, i.e. give away their company for next to nothing, simply for helping them avoid prosecution. Goldman Sachs borrows $2 billion from the market and rescues the unfortunate company by buying up its assets in a bankruptcy auction. The beauty. Directly Russia of the 90s, racketeering, nothing personal. Who is next?